there. Why don't I start off by introducing our panelists for today. First, we have Michael Jansen. Michael is Everest Group's chief research guru and is responsible for guiding the practice's research agenda and aligning its capabilities with the market's disruptive changes and next generation demand. Michael is also co-founder of our research practice and has had a broad and varied career in the global services industry, which is another way of saying that he's been around for a long time. Salil Dani is our vice president with Everest Group's global sourcing practice. He is the lead analyst for the Market Vista program, and he also manages our work with global enterprises, service providers, and investment promotion agencies. Finally, we have Prashray Kala. Prashray is a practice director with Everest Group's global sourcing practice, and he leads research and engagement focused on locations optimization, GICs and shared services, and the engineering services program. And lastly, I'm Alan Wolf, where my claim to fame is that I once ate an entire pizza in one sitting. So luckily, Michael, Salil, and Prashray will be doing most of the talking today. In addition, as Colin mentioned, if you have questions today during this session, please feel free to type them into the question box. We have one of our analysts, Saban Nafiz, who will be answering your questions. Just know that we have a lot of people on the webinar today, so it may take a little time to get back to you, but we will do our best. Last thing before we get into the content today, the question we always get asked on these webinars, and the answer is yes. Yes, we will send out a link to the recording as well as all of the slides that you're about to see. So that will come out within the next 48 hours. So I know everyone would be interested in getting that information. With that, why don't we move on to really just the focus of the webinar. So as we mentioned, the key focus here is to share some of the global services developments from the first half of this year. And then what are those implications on the global services market, and what are the key issues that everyone should be aware of? As you see in the bottom of the slide here too, just to give you an idea of where all this information comes from. It comes from our research, our work with our clients, and our insight into really what's happening overall in the entire global services market. Next, let's talk about what we're going to cover today. So as a context, this is a special webinar in which Everest Group experts want to summarize and explain what we believe to be the most impactful events in the global services industry for the first half of the year. In addition, we're also going to cover a special topic on the results from a recent survey with leading service providers. So this survey covered the key pressing issues of the global services market, and then also we will offer an outlook for the remainder of the year. So with that, I think the best thing to do is let's start with the talk about the first quarter trends. So the first half is a good time to take stock of the year that it's gone by and see what's going to happen going forward. But before we do that, we're going to have two audience polls, and I want to start with our first poll right now. So hopefully we will have everyone participate in this poll. So our first poll question: what is your firm's or your client's predominant sourcing strategy for next generation digital skills? So we're covering that, and the choices are A, mostly outsourced to traditional service providers; B, mostly outsourced to niche service providers; C, mostly retain in-house support by global delivery centers; and D, we feel that there's going to be a balanced mix, both outsourced and in-house delivery. So if everyone would just click on what you think your organization or your client's organization is most likely to deliver in terms of what their strategy is for next generation skills. We'll keep the poll open for another couple of seconds, and it makes all of our presenters happy when we have a large participation. So why don't we close out the poll right now, and let's see what we had. So this is pretty interesting. The overwhelming majority say that there's going to be a balanced mix of both outsourced and insourced, and then kind of broken out evenly on traditional outsourcing or in-house support. So with that said, let me ask Salil, how does that jive with what you've been seeing from the market in the first half of the year, Salil?
Sure. Thanks, Alan, and welcome everyone. As Alan described, the first half is definitely an interesting point for us to take stock of where the market is. And what we actually see in the response to the poll question is in some ways confirmation of what we're also tracking as part of the global services market as part of our ongoing research and client work. So just coming specifically on the poll question, I'm not surprised at the fact that an overwhelming majority of you believe that the balance sourcing model, leveraging both outsourcing and in-house delivery, is really what you see as a predominant model, because in some ways it's also reflected on what we see in this chart here. What we see here are a couple of trends. One is overwhelmingly increasing incremental demand across both outsourcing and internal delivery models. So both in terms of new deals which are being signed, as well as new GICs or shared service centers being set up. And the second interesting trend, which is directly confirming what you all responded just now, is the fact that the share of digital services is increasing steadily across both outsourcing as well as internal delivery models. So you can see that the number of outsourcing deals have increased on the left-hand side, which is across both technology services, business process services, contact center, analytics, and so on. And then on the right-hand side, you see that the number of new GICs have also increased. The other bar that you see in blue is a share of digital services that has also steadily increased. And right now, digital services are more than half of new GICs, as well as almost a third of new outsourcing deals. Just a couple of additional points on this page, just to provide more color and context. Specifically talking about the outsourcing demand, we definitely see that the activity, especially in this year, has been led by North America and also by the rest of the world. Europe is still a little slow to pick up, but we do see signs to feel positive about the European market as well. The other interesting thing that we saw was a significant uptick in volume of short-term as well as medium-term contracts. And some of this could be because of the fact that many of the digital deals are still in pilot stages, but some of them which have started to reach maturity and long-term implementation will impact the contract duration as well over the next couple of years. From a shared services or from a GIC perspective, the chart on the right-hand side, once again, the GIC activity was largely driven by Europe, in particular Central Eastern Europe. And from a sector perspective, we saw a significant diversification of the GIC setup beyond the traditional banking, financial services, industry vertical to verticals like retail, manufacturing, healthcare, and so on. And also from a function perspective, there was a secular increase in number of new centers for R&D engineering services. And those that have attended our previous Market Vista webinars would have seen that we also made a comment on a very similar trend, even in our previous webinars. So in some ways, this is continuation of the trend that we saw over the last couple of quarters. And if we can start to now break up the distribution of the outsourcing contracts by sectors, which is what you see on this slide. A couple of interesting points to also make here. One is that the share of banking financial services industry vertical, both in terms of new deals as well as in terms of ACV or the annual contract value, has significantly increased. And the second, of course, is the fact that public sector or the government is a vertical where we do see a steady decline. So specifically coming to the banking financial services industry, this is, from our perspective, not surprising because a lot of the growth in deals volume as well as deal ACV has been predominantly driven by the US tax reforms, where the savings spend is directly leading to increase in discretionary spend, particularly for some of the technology and even for some of the business process services. Interestingly, in the banking verticals, we also saw some of the large renewals taking place, and that has also contributed to uptick in both the volume as well as the average ACV of the banking financial services industry vertical deals. In case of healthcare, we saw that again there is a marginal increase in volume, but a significant increase in the ACV or the contract value. And a lot of reasons behind why we are seeing this. Firstly, the providers have been increasingly focusing on adopting the value-based care model. Secondly, many of the enterprises in the healthcare sector are also consciously focusing, in our view, on cost optimization efforts. And a combination of both these two drivers has been leading the healthcare sector deals to increase, particularly in the ACV bucket. As far as other verticals are concerned, the deal characteristics for technology communication, retail, and CPG are fairly cyclical in our view. And therefore, right now, there could be a marginal uptick, but clearly going forward, we see banking and healthcare as the two verticals which will continue to drive the momentum in the outsourcing industry going forward. We've talked about the demand views in the first half of this year. Let's look at the supply and the GIC trends now, and I'll hand it over to Prashray, who can talk about next couple of slides.
Sure. Thanks, Salil. Now, as Salil has mentioned, the overall IT/BP global services industry is growing at a steady pace. But if we specifically consider the IT and digital services which are supported by the global in-house centers of enterprises, what we are seeing is a massive increase in the number of new GIC setups which are focused on digital delivery. Now, in 2017, only 28% of the new GIC setups were supporting IT services, whereas in the first half of 2018, 42% of the new GIC setups were focused on supporting the global organization with IT and digital skills.
Well, Prashray, this is Alan. So that's pretty interesting. So my question really is this insourcing trend specific to IT services only, or is this also seen in other functions?
Great question, Alan. Now, if we really have to take a view to this, we'd say that this is more unique to IT services. And the reasons for that is that because the global organizations, as they look to increasingly adopt Agile and DevOps, they're looking for getting more control, more seamless work transition, and a higher focus on change management. Now, further enterprises also believe that more end-to-end work can be delivered from their own centers. And if you couple this up with the niche digital skills becoming tough to hire in the onshore source geographies, all of these factors result in GICs becoming the more preferred options for enterprises. So, multiple reasons going behind this, but, insourcing is something which we are seeing growing more uniquely to the IT services.
Gotcha. Thank you.
Okay. Moving on to the next page. Now, we see that there has been a steady increase. If you see the chart on the left-hand side, we see there is a steady increase in the setup of offshore and nearshore delivery centers, with the first half of 2018 having 153 new delivery centers being opened up, and this is an all-time high. Within this 153 delivery centers, 2/3 were GICs or in-house centers of the enterprises, and the remaining 1/3 were new center setups by the service providers. And again, going back to Salil's earlier point on more focus on R&D and engineering, out of this number, 44% were focused solely on R&D and engineering services. Now, this shows the increasing confidence of enterprises to support this high-end work from global locations. If you look at the countries where these offshore and nearshore delivery centers were being set up, we see that the top 10 locations of choice still account for 66% of the overall locations activity. We have more details on the next page where we look into details of the emerging hotspots in terms of locations. Okay. We see that in the first half of 2018, India continues to account for a very high share, which is 21% of the new center setups. Rest of Asia accounts for 25%, and nearshore Europe accounts for 31% of the new center setups. Now, what is particularly interesting is that there is a growing focus on new locations, especially tier 2 and 3 cities. If we take the example of India, we see locations such as Chennai and Nagpur becoming more prominent in the service delivery portfolio of companies. And overall, across the world as well, if you see Singapore, Lithuania, and Portugal, these remain the top 3 locations where we've seen the largest gain in share in terms of location activity.
Wow. So for Shrey, that's new. So when you talk about Lithuania, Singapore, and Portugal as really new center setups in what we've called unconventional location, what are the reasons? Are there specific reasons for this sudden increase?
So, Alan, if we consider these unconventional locations, or as we prefer to call them, previously under-leveraged locations, we see that there are 2 main drivers of this increased interest. First of all, most of the companies are looking to diversify beyond their traditional choices, such as India, Philippines, and Poland, where they've already set up scaled organizations. Now, secondly, Singapore, Lithuania, Portugal, they are also differentiating themselves with high availability of digital and R&D specific talent, and this is being shown in the specific type of centers being opened in these locations. So, Nokia, Deloitte, Honeywell opened digital R&D centers in Singapore. Robert Bosch, OutSystems in Portugal, Festo, Beverage, again, digital R&D centers opened up in Lithuania. So overall, we are seeing specifically digital and R&D centers being opened in these newer offbeat locations.
Gotcha.
Okay. On the next page, but so far we've seen that the overall global services industry continues to grow. But as service providers seek to grow in specific client segments, new geographies, or specific industries, or if they look to improve their service delivery footprint and enhance their focus on digital capabilities, we see that many of them are opting for large-scale acquisitions. Now, Concentrix $2.43 billion acquisition of Convergys, which will add a big client base in strategic verticals and will also provide a broader global delivery infrastructure. Atos announced a $3.4 billion acquisition of Syntel. Again, this will add to client base in North America, increase the depth in banking. What's also curious to note here in this particular acquisition announcement is that almost 90% of Syntel's 2017 revenue was from North America, and 40% of the overall revenue was driven by digital services, IoT, and automation. So, sheds more light on the key drivers behind this acquisition. Similarly, Teleperformance's billion-dollar acquisition of Intelenet, that again hopes to encash on Intelenet's integrated solutions, transformative services, and the digital optimization capabilities, which Teleperformance hopes to marry with its global platform capabilities to come up with an overall synergy.
Wow,
That's a lot of money.
yeah, and Alan and Prashay, what I'd look at here and say, there's two common themes here. One is filling in capabilities on a global delivery platform, but also you're starting to see that the first real impacts of digital into the outsourcing industry at a company level. And there's a common theme in there. If you look at it and see a lot of contact centers providers there, and those tend to be very labor intensive. And as we move to digital platforms where contact is not just a voice contact, but it's through multiple digital platforms and channels, you're starting to see stress on those providers as they look to have moved from higher cost voice contact to lower cost digital platforms. Revenue growth is a challenge for them, and so you're starting to see activity there to consolidate, to look for economies of scale and continued growth in an inorganic way.
So Michael, I'm sorry, do you see that trend continuing?
Yeah, I see that trend happening in other industry footprints too. I think digital will have an impact on other aspects of outsourcing over the next 12 to 24 months. I think you're going to see some other additional big acquisitions, not just in the contact center area.
Gotcha. Great. Okay, why don't we go to the second phase of our webinar today? And what we really want to talk about now is what are the key implications of the issues that are affecting the global services market. So we tried to give you a bit of a lay of the land from what we've seen in some of the trends in the first half. Now let's go forward. But of course, the first thing we want to start with is a poll question. So get your voting fingers ready. And our question now is, so what are your sentiments about business revenue for the remainder of 2018? So A is that I'm scared to discuss it with my boss because it's not looking good. B, worried about my revenue targets. C, expect business growth from new business or client groups. D is I'm cautiously optimistic. Or E is we're going to hit it out of the park and we'll have so much more money that we'll be able to spend more money with Everest Group for their help. I kind of added that last part in, but I figured that's what everyone would be doing. No, seriously, once again, what are your sentiments about business revenue for the remainder of 2018? And you could see it's from terrible all the way to great. So why don't we keep the poll open for another few seconds as people are looking into their own crystal ball. And 3, 2, 1. Why don't we close the poll and let's see what everyone says. So we are kind of right in the middle. You can see it's fairly even. 38% are cautiously optimistic, and then another about 57% are torn between expect some business growth but worried about the revenue targets. So that's pretty interesting. So Michael, let me ask again, based on your conversations with clients, does this jive with what you've seen?
Yeah, and as we move into the next slide there, where we compare to the answers we got from the folks in the analysis we did earlier this month. In that previous slide, you saw that 2% were afraid to talk to their boss. So probably those folks are probably looking for new jobs. But overall, the theme tends to be more optimistic. The panel we just saw here was a little bit more pessimistic than the panel we got earlier in the month. But 56% are optimistic, meaning that they're looking forward to the numbers and thinking that their bonuses are going to be better, thinking that things are in overall looking more optimistic, with only 14% are more pessimistic. So I would say these numbers are pretty good. You got a very good business climate. You got Wall Street hitting all-time highs almost every day, and there's some stress in the system around some geopolitical things that we'll talk about here in a little bit. But overall, people are feeling optimistic.
Good to hear. So Salil, why don't you talk to us a little bit about what you're seeing?
Sure, and just building on the point that Alan just made, we certainly see a lot more optimism and based on the responses that we got earlier in the month. And what we actually see is, interestingly enough, the tier 2 service providers, as we tend to call them, and the participants from that group being more optimistic about 2018. So as you can see on this chart, there is a growth expectation for 2018 amongst the tier 1 and the tier 2 service providers. And you can see that the expectation from tier 2 service providers is higher compared to tier 1s. Just a bit of context. This is not published corporate growth projection numbers that we're talking about. These are really the sentiment numbers based on the survey that we conducted earlier in the month. So this is basically based on what the participants from these two organizations or these two categories of organizations feel about how the rest of the year will pan out. And if you also look at the other interesting trend around how 2019 and the subsequent year will go. Interestingly enough, all the respondents in general feel the 2019 is likely to be even better. 51% across tier 1 and 61% across tier 2. And here as well, the tier 2 service provider category felt much more positive about even the next year. So we see net, we do see optimism in the industry, and this optimism is even higher for the participants from the tier 2 service providers compared to the tier 1 service providers.
Right. And so when I look at those numbers there, if I go back to the actuals for 2017, the expectations for 2018 are roughly double. And I realize they're not exactly the same metrics that we're talking about, but significant optimism here again as we look forward to the rest of this year.
So Michael, we've been talking a lot about investments previously and some of the acquisitions. Could you talk a little bit about, are all digital investments going gangbusters all over the map, or do you see some differences?
Yeah, so let me introduce the slide here and help provide some reference points. So across the what we've done is combine two different questions into one graphic. And so if you look across the bottom, we're asking service providers where they think their investments are for the next 6 to 12 months. Where are they making their bets? And then on the y-axis on the left, we ask the questions about where service providers think clients, not themselves, but clients are achieving real benefit. And so as we add in a couple different focus areas here, you'll see in the bottom left-hand corner, blockchain and Internet of Things, both receiving fairly low investments. In fact, among the lowest investments and among the lowest value. And I labeled that as the no man's land. You know, there's a lot of talk about blockchain, but not a lot of commercial activity within the services industry. If I was to go to the upper right, it's easy to focus on those things around automation, enterprise automation, RPA, AI, cognitive, some of the big data analytics here. And you're going to see those rank the very highest in terms of service provider investments and priorities. And they're also among the highest in client or enterprise value propositions. And so there's a good reason for it, and everybody wants to play there. So that leaves us with the upper left group. And this is an interesting group here. I've labeled it as kind of a mismatch. So here's where service providers are not exactly making big investments. I mean, you look at mobile there, almost very little investment from the service provider, cybersecurity, not so much. But you'll see that there is a perception that clients achieve high value from that. And so we'll have to watch to see if you know, if everybody's kind of on the boat going toward the right. I know there are certain service providers, and the way I'd look at this is everybody's saying the right is good, and then where you have on the left, you have more niche players attacking those specific areas. So I know there are some service providers out there that are really thinking about, hey, how is 5G mobile going to make a difference? And they really focus on those value propositions. And so I think the stuff on the left is going to be much more niche oriented, is what this is telling us. Okay, so one of the things as we move there, I'm always looking for the issues that are driving investments and activities, and what are the motivations behind things. And so, you know, the easiest thing is, what are you losing sleep over? And so certainly as labor arbitrage as the primary value proposition winds down and you move to more digital solutions, that puts pressure on pricing, because if it's automation, that's the ultimate labor arbitrage. And so you're seeing that the number one issue that service providers are thinking about right now is pricing pressure. But almost identical to that is adapting to the new business model. So I think it's a 1-2 punch of the old business models of labor arbitrage are still there, but they're winding down as the primary, and as new business models around digital are winding up, that it causes consternation here. Now, what you're going to see in the next couple pages is lots of themes around talent. And what you see here almost is equal to the top two is the talent and skill shortages. And so service providers are looking at it and saying, hey, I'm having challenges getting the right talent on my team. And and as we look at especially in North America and Europe, where we actually have skill shortages and talent shortages across the board, not just in services but across the board, that becomes an increasingly bigger challenge. What you don't see is people worried about some of the noise in the marketplace, if I'll call it that. So regulations, a lot around, you hear a lot of things around the trade tariffs, you hear a lot of things around Brexit, you hear things a lot of NAFTA, there's GDPR, all those things. Not while they're noise, a lot of noise and create a lot of headlines, they're not necessarily making the service providers lose sleep. And then at the very bottom of the list, we had a longer list than this, but we're just showing you some of the highlights here, is capital. Nobody's worried about getting money. If you have a good value proposition and you have a good investment thesis, people are able to find money. Money's cheap right now, and you can see that in these slides.
And as we build on the point that Michael was just describing, talent is actually one of the top issues for service providers and also actually for enterprises. And this is also reflecting in the responses that we got to our survey, where the biggest issue specifically within talent was around shortage of next generation skills. So as we started to peel the onion around what is it that service providers are most concerned about when it comes to talent, the answer was it was about the shortage of next generation skills. And this is not surprising, given that there are lots of factors which are impacting the way the talent models are there within within the industry. There is, of course, a changing skill profile, and also automation is impacting many of the jobs and many of the ways in which we are doing things. There is restructuring of the value chain and also increasing focus on outcomes and value delivered, and therefore that's really impacting the talent model and the demand for next generation skills. It has an implication around how do companies think about talent acquisition for these next generation skills. How do they really plan an approach to continuously reskill or upskill the talent workforce, and also a significant impact on redesigning the employee value proposition so that there is a fairly strong and a very healthy pipeline of the millennial workforce and the workforce which is available for supporting the evolved demand from clients. Specifically within next generation skills, as we look at types of skills where organizations and service providers in particular believe will be important, it's looking at skill sets around which require design thinking, problem solving, pattern recognition, and so on, which are somewhat harder to train in a programmatic manner. You need to have those as an individual, and you can fine tune them. But specifically on these next generation skills, we do see service providers, raising it as a big area of their concern and what they're really focusing on. And as Michael mentioned before as well, if you look at the other issues around talent, whether regulations on visa or any of the immigration policies and the ability of those to impact global mobility, change management, and so on, are these really the biggest talent issues for service providers? The answer is an overwhelming no. Yes, there could be some angst in specific situations or specific provider groups, but in general, as we take a stock of the overall market and look at responses across a wide variety of service providers, the biggest issue is around next generation of skills, and the rest of them are not the most critical issues.
Okay, so as we think about, we've talked about the issues, we've talked about some talent. Let's talk about buying centers. And so what we've done here is, again, taking two different questions, put them on one graphic. And so let me kind of orientate again. Along the x-axis and on the bottom, what we talked about is the current largest buying centers. We asked the question, where do you think you get the most money from today? And then we asked the question along the left is, what's the fastest growing budget center? So where do you see the most change? And so the way to read this chart is anything to the upper left of the line is where we're seeing relative growth in a buying center. So I'm going to break this into chunks again, and let's deal with the bottom right. And so you'll see over in the, with the biggest buying centers, you got the CIO, you got the COO, and the CFO. And they, I'm not going to say that these are not going to be important buying centers in the future, but what you see is on a relative basis, these are declining in terms of, on a relative basis, they're declining in overall importance. If you look at the next grouping, what you'll see there is a group of individuals that have relatively small budgets today, but on a proportion basis, they have an increasing importance in future spend. And so you see there the chief marketing officers, you'll see the shared services, and you'll see the head of strategy above the line. Again, not the biggest buying centers, but significant growth on a relative basis. Now, it's not hard to see the guy at the top there, the chief digital officer. And so that role, we are seeing significant, and stands way above everybody else in terms of future growth and budget. And so significant role there. And I think you can kind of summarize all of this by looking at this and saying, when there was big bang deals, when you had an entire IT or big parts of IT was being outsourced or offshored, same with some of HR or finance or some of the back office functions, those were really more functionally driven. The CIO or the CFO may be saying, hey, I want to make big chunks of movement. But as you move more into implementation of the digital strategies, you find the deals to be a little bit more niche-y. You find the deals to be much more experimental. And not to say that they're all small deals, but that they are being led by other buying centers. And so the chief digital officer, which, there can be a discussion around chief digital officer versus CIO, and, are those two different roles and how do they play together? And maybe think of the chief digital officer being a little bit more business oriented and the CIO being a little more technology oriented. And so we'll see how that plays out over time. But right now, chief digital officer is a hot growth area. Doesn't have the biggest budget spend on the thing, but still fair amount of money there as well. I don't want to neglect the technology leaders in the business units, kind of right there in the middle. I think that's another one interesting to talk about. Again, with the theme that the businesses are controlling more of the spend than the technology leaders themselves. And so a little bit more push toward the business side of the equation. Okay, so now let's talk. We talked about issues. We talked about what buying centers. We talked about some of the talent issues. What are the winning value propositions? And so one of the things that we're focusing on here is asking service providers, what do they think it takes to win? And so these are really tightly coupled. I mean, we're a little more dramatic on the graphic here, but really you've got three things that are really driving the value proposition. One is skills. Second is execution ability in a faster, quicker pace. And the last one is to reduce cost. And so, you think about it here now, the reduced client cost will always be a high value proposition in outsourcing. No doubt about that. It's one of the key things, but moving things faster, especially in the digital platform, has almost equaled that in this analysis. But again, we're back to the skills on the left-hand side there. And now we've only heard it from, it's a concern of how do I provide those skills by the service providers, but they also realize it's a winning value proposition. If they can find these rare, talented folks, because there's a shortage of them on all aspects and all buying parties, if they can find them, they know that's a winning value proposition. What you don't see as a winning value proposition is moving resources onshore. Okay, I know there's a lot of political overtones, and I'll try to keep all the politics out of it. But moving resources onshore, while it likes to get a lot of press when it happens, it's not happening very often. It's not a winning value proposition to say I'm going to move jobs back to the U.S. or Europe. It just isn't. It's not happening there. And the second part, which used to be a big value proposition, was avoiding capital cost. Again, thematically, that because capital is cheap right now, it's a very low number here. It hasn't always been that way. I can remember back in the deals in the 80s and 90s where, when you had $30 million machines in your data center, avoiding capital cost, going to your board and looking for capital was one of the top value propositions. But again, things are more incremental right now. They're more capital is fairly abundant, it's not a big winning value proposition. So go back to skills, execution speed, and cost are the things that are dominating the arena right now.
Great. Okay, so with that said, we've gone through a lot. I guess the question now is, what are some of the takeaways that we want everyone to glean from our presentation this morning? So Michael, why don't you start off with the first one?
Yeah, so let's be positive here. Industry optimism is high, and it's rising. And so as businesses are doing well, this sector is also seeing very positive results as well.
Okay, I'll take the second one, which is that enterprise automation in all forms is off the charts. People have questions. We are getting, as an organization here at Everest Group, we are getting bombarded by people trying to understand what's happening, how we can leverage this, and what advantages we can gain from it. How about number 3, Michael?
Yeah, so again, cost is always an issue. Be able to drive, pricing pressures are there, adapting to new business models. It's an influence from the overall theme from moving from labor arbitrage to digital, and that's keeping service providers up at night trying to think about how do I provide a value proposition that's compelling and also competitively advantaged. And so again, capital and government noise and regulation, not so much.
Okay, number 4, it seems basic. It seems like it's been there all the time, but probably now more than ever, talent is critical in terms of both the client value proposition to have the team to be able to deliver on it, but also it's important to understand from a service provider's perspective, do they have the right skills to deliver the value, the effectiveness, and the efficiency going forward?
Yeah, and Alan, if I was to combine those last two here, you see that's, if you look at one of the areas that's just absolutely red hot, and we talked about it on enterprise automation, but it's the RPA vendors out there. There's a whole host of them that have gotten big chunks of capital recently. They're making big investments. They're seeing growth rates that are astronomical. I mean, they're relatively small bases, but they're astronomical growth there. And that's because they are not only addressing the ability to help in the digital world, but they're also helping to improve the overall customer experience as well as the employee experience. And so if the solution, if the challenge is you don't have enough talent and you can't find the resources, one of the things you need to do is be able to make sure that your existing workforce is more productive, and providing that enterprise automation, the RPA solutions and AI are one way to make that happen.
Super.
And then finally, the chief digital officer. Again, all comes back to the digital conversations, the hot buying center. But I would also, if you're looking for competitive advantage, I'd also look at that chief marketing officer and chief strategy officer, because they're closer to the business, and we saw that theme throughout that chart there. Closer to the business was better in terms of growing budgets.
Super. So everyone needs to study these final takeaways because it will be on the test next week. Okay. So first of all, I want to thank Prashray, Michael, and Salil for the content. Everyone stick around. We're going to have a Q&A session in 1 second. Just want to point out, so to ask any questions during the Q&A session, please type it into the question box. We have received a number of questions already, and we will do our best to get to as many as possible. The other thing is we get asked a lot of questions afterwards by people, and if you have follow-on questions, you can see on the screen right now, here are ways to contact each of us, and we can always make sure that we get you the right information that you're looking for. So with that, why don't we start out with our first question today, and this came kind of at the beginning of our webinar. I'm going to go back and ask the team if I can find this question. So this came from Claire, and Claire said that when we were talking about the increasing trend of insourcing, based on the increasing trend of insourcing that we talked about, it must be a concern for the service providers. What are they doing to address this trend? Who wants to take
So
that?
let me take a crack at that, and I'll let Salil jump in there. But obviously, the outsourcers understand that, and they are very focused in on their investments in digital. You saw that on the chart there that a few moments ago. They're focused in on that digital play. They are also focusing in on producing more industry context in their solutions. So they have a more consultative approach. They're making investments in the onshore for those that were traditionally offshore. They're making more onshore investments, and they're also out there in the acquisition mode too. So we showed you 3 big acquisitions, but there are dozens and dozens of smaller acquisitions going on out there that are very niche, very looking for little spikes of competitive advantage.
Gotcha. Okay.
And just to add on to what Michael just said, one additional thing that some service providers are doing is really to also target the GICs, the shared service centers, as potential buying centers and work collaboratively with them. So we saw on the chart that this is still small, but it's a growing segment and a potential big client base for many of the service providers. So as we see the shared services model also continuing to increase in its traction and its role, we do see service providers also targeting that particular buying center and also work collaboratively with the shared services across a host of various issues.
Great. Okay, our next question is for Prashray. Prashray, this comes from Atit, and it is, the question is that Atos, when we were talking about some of the acquisitions, Atos and Teleperformance are both French companies. What does this indicate? Do we see that France is going aggressively into IT, or does it happen to be just coincidental?
Alan, we'd say it's more of a coincidence. As Michael had also previously mentioned, this is more a function of the contact center industry being at a key inflection point, where it's moving from a more labor arbitrage to a more digital-centric solution approach. I think this is purely a coincidence. Just that 2 large companies happen to be based out of that location.
Gotcha. Okay. My next question comes from Peter, and it's for Salil. Salil, so when we're talking about just how the usage of automation services is getting higher and higher, with that, why are we still seeing an increase in the number of global delivery centers? They seem to be kind of counterintuitive there.
Sure, and that's a great question. So the way we see that both these trends playing out, increase in automation as well as increase in GICs or global delivery centers, we don't view them as being conflicting or contradictory. In some ways, both of these are somewhat independent trends, but they also have certain linkages. So specifically, when it comes to the this specific question, yes, while automation has had a proven track record in reducing the effort in specific areas, particularly more transactional-based processes, the reality is, if you look at the industry as a whole, the adoption is somewhat limited to specific components of certain processes or to more of the transactional or rule-based work. Customer demands and requirements for very domain, very context-specific needs continuously keeps growing, and therefore companies need to look at also setting up alternative delivery centers in global locations, including offshore locations. Couple that with the fact that the talent proposition for many of these global locations outside the US is also increasing, and therefore we're not surprised at seeing that while yes, there is automation adoption, there's also increasing usage of global centers, including those for leveraging some of the digital skills that we talked about earlier. So in some ways, we don't see these 2 trends as conflicting, but in some ways, those are independent trends, and there are specific drivers as to why each of these, is seeing the traction the way we are seeing the traction.
Great. Okay, thanks. So my next question is for Michael. Michael, this comes from Rajiv, and Rajiv said, we're talking a lot about automation. What do you see, Michael, as the take, or what's your take on in-house tools versus readily available tools from the market, from the market, and how's the breakup of the spend on that?
Yeah, so I don't. We've done quite a few analyses and studies with enterprises on the RPA topic, and I think this is going to be a market that where you're going to see virtually all of the spend go to the tool providers out in the marketplace today. I don't know anybody that tries to build their own version of a spreadsheet or their own version of a presentation package. They're all going to a version of Excel or their near competitors. There are a couple of them. So in the same regards here, I think people are going to go to the software vendors that are in the marketplace. The tools are relatively cheap. The value is relatively high, and they've gone through all of the investments that would seem to be nearly impossible for an in-house solution. So that also goes to the fact that as all the money is coming into the RPA industry, there will be increased investment in creating the connectivity, the links between all the other SaaS platforms that are out there and all the different versions of automation. They will be, if they don't have it now, they'd be working closely to bolt that stuff on to the overall backbone of the RPA platforms. So I think this is going to be I'm going to be exaggerate here, but I think this is going to be a 99-to-1 type ratio.
Wow. No exaggeration. Okay. Our next question is for Prashray, and it comes from Yugal. And Prashray, the question is that I heard that global services industry seems to be slowing down in the Philippines. Is India next in line for a slowdown?
Interesting question, Alan, and Yugal, who's asked the question as well. So the industry in Philippines is still growing. Yes, in revenue terms, there is a high growth. In headcount terms, the growth might be a bit slower, but again, that's mostly due to the fact that a large portion of Philippines industry is focused on contact center, which again, as we discussed earlier, is transitioning to a more digital enabled service. Whereas if you see India, the IT BPO industry is more focused on IT and business processes, and they're still growing in terms of headcount. There's niche skill demand for IT. So overall, there is a relatively lower impact of these trends on India. But we do see continuing growth for the IT BPM industry on an overall basis, as well as for India, Philippines separately too.
Gotcha. Great. Okay, we have time for one more question, and I'm going to open this up to the team. And the question comes from Sandeep is, do we see that GICs are using startups extensively as a means to develop digital competencies?
Alan, let me take that up. We're definitely seeing an increased interest in GICs looking to partner with startups. Usually, the freedom to engage, the ownership and the funding has largely remained at the enterprise level. So on the enterprise level, there's a lot of engagement with startup, funding of startup incubation programs. We've seen relatively less of this at the GIC level, but this is something which is there on the priority agenda. Right now, it may be low, but definitely we expect this to increase in the next few years.
Great. Okay, thank you. Wanted to just follow up. Once again, I want to thank everyone for that. Couple of reminders also. This is just 45 minutes of content and Q&A. What we also want to share with you is that you can check out our blogs for the latest perspectives on global services. We're writing constantly. That will really help you get a good feel for that. And then also, for those of you who are members, you can see some of our related content. And these are all reports we've written in much greater detail for this content as well. For anyone who has not been able to get their answers, their questions answered, please, we have captured them. We will get back to you on that. I want to thank you all for attending today's webinar. We will be having more in the future. Our next Market Vista webinar will probably be mid to late November, and that'll be talking about Q3. So with that, we want to thank everyone for participating. We hope you have a great day, and if we can help in any other way, please do not hesitate to reach out to us. Thanks, everyone. Have a great day.